Make sure it's recording. Kobe said, how's it going? What's going on? Your first class too. Welcome, Robert. I love it. I love it. Cool. All right, man. So we're going to go ahead and get started. And everybody can see the screen. Let's get it. Guys, it's been a wild week in the market already. How many have been following what's going on with GA? I got if you see me looking down here to the right, I'm looking at my phone and following along with the comments, because when I'm sharing my screen, I can't see the comments on my laptop. So, yeah. Hey, Amina, God bless you. Okay, so guys, as you know, I always like to start out on the weekly chart, and man, it has been a wild week in the market already. What we talked about last week, man, we called it right to the button, didn't we? Who was in the? Go ahead and let me know if you were in the class last week. Who was in the class with us last week? Last Monday, we talked about the Vortex. I see the ones coming. They know I like them ones. I like it. I like it. All right. So you guys, if you were in the class last week, then you can see that exactly what we thought was going to happen happened. Greg said he was not there. All right. Well, you're going to be here tonight. So we talked about and I always kind of do this. So this if you've been in the classes for a while, this is probably redundant to you, but it's worth kind of hearing again, just because it's important. Okay. Many times I see people making these mistakes. All right. We look at something like this and we say, see, that's bullish. And so we anticipate buying, when the truth is that we got to look out and see a bigger picture, right? And those of you who have been in the classes a while, you've heard me preach that over and over and over again. I believe in zooming out, right? Getting a better look at what's really going on, because when you see that little tiny piece over here, as we're zoomed in, we kind of see this little tiny piece, and a lot of us want to trade based on what we see right in front of us, but that's not solid. That's not, you can't do that, right? You can't essentially just trade on what's in front of you. You got to look at the bigger picture and get a true look at what price action is telling us. And when we look at GA on the weekly chart, I do top-down analysis at the weekly chart, unless the weekly chart is flooded, and then I have to look at the monthly chart. So I do top-down analysis from the weekly, and I trade the 4-hour on the swing. And if we're trading the short term, then we trade the 30-minute or 15-minute. But for the sake of swings, we trade the 4-hour. On the weekly chart, we've been in this channel for over 3 years now, and we've had this upward swinging channel that we've been in for over 3 years, since September, really October, but really September of 2016. So we've had a great bull run here for a little over 3 years. So pretty cool stuff when you kind of scroll out, zoom out and look at the bigger picture. You get to see what's really happening in the market. Oh, I lost my chat here. There we go. So you get to kind of really see what's going on in the market, right? So now let's zoom in a little bit, and now we know that this is in an upward channel. And even though we've been poking out in here, we essentially were expecting this channel to be respected. So let's kind of zoom in a little bit and see what's really going on. Watch this. I'm gonna show you something that's pretty crazy. And again, those of you who were in class last week, you can attest to the fact of what I'm about to say. But last week we were in here, And, you know, again, it was Monday, so it was in the beginning of the week. So we were up in here somewhere. And I told you that what we were waiting on, and I told you this was a very important candle, because essentially we would have been, if this would have closed above the channel, we would have been a full cycle of 4 weeks, a full 4-week or 1 month cycle outside of the channel, meaning that we would have to now look, because it's flooded, we would have to now look at the monthly chart to get confirmation. And so I told you that this particular candle right here was going to be very, very important, and that I anticipated it closing down inside of here. Now, when we go back to our last taste of normality, it was back here before all the coronavirus and all the craziness, you know, started happening. And so back here, we were inside of our zone. We were inside of our channel, and we were approaching you know, we had this pullback here, and we were approaching the top of our zone. And essentially what we had happen was we had a big 500 pip gap. Then we had this huge spike down, huge spike up, back down, huge spike up, back down, spike down, way back up. It's just been crazy over the last month. And, you know, we had this big move here. And then essentially we still were trying to fill the gap from down here, because even though it did come down, it didn't really close to fill the gap, right? And so we were still looking for this gap to be filled from over a month ago, a month and a half, 6 weeks ago or something. And that's why we've had all this abnormality in the market. And, you know, anything right here, we shouldn't even be thinking about a buy, because we're at the top of a channel. Well, then you see we broke up above the channel, but we didn't stay there. So just to kind of reiterate what we talked a little bit about last week, hey, do me a favor and mute yourself so I don't have to mute everybody. What we saw here was a big move up, but then we saw even more sell pressure. So even though that's blue, we know by price action that this is actually a bearish candle, right? Because this has more sell pressure in it than it does buy pressure. Same thing here. We had a nice bearish candle, even though we had a huge gap up, and we had a lot of bear pressure in here, bringing it back down to our line. Then we had this another gap up. So we had all of these gaps right here. A gap here. We had a gap here. We had a gap here. And so we had to fill all of that. In order to be back to normality, we had to see all of those gaps get filled. And so I told you, wait for this candle right here. And I think that this candle has the possibility and the potential to close down in here. And I gave you guys this white line on top of this yellow line, because it has to fill the gap. Well, it did exactly what we thought it was going to do. It came and closed just below our yellow zone, which is one of our major zones. It closed just below the yellow line. And then look at what I want you to really kind of see here. And I posted it in the group, but I want to explain it. I want you to see really close up here. Guys, look at this. Look at the new week after that major movement, after a major gap here, a major gap here, a major gap here. After all of this craziness, we have this huge push down right to the area that we expected it to be, right in here, okay? It fills the gap. It comes back down, comes down to our level, and then watch what happens. Notice how the gap here is nearly non-existent. It's nearly non-existent on the weekly chart. And the reason is because the little tiny bit of gap that there's there, maybe 20 pips of gap that's there, what happened was it was lower instead of higher. Notice how every one of these gaps was a bullish gap. And I'm not going to get into the depths of what gaps are tonight, but essentially in a nutshell, what they are is it's when the market makers are expecting or anticipating this much movement in the market over the weekend, and then the gap is essentially the movement that didn't happen. So if they expected, you know, 600 pips in the market, but only 100 happened, they pushed the market all the way up to here, but only 100 pips came. So you have a 500 pip gap. Then it happens again, and it happens again, right? And so down here, as we come back down to normality into our normal zone, you would almost expect for a gap to be up here if you didn't know what you were doing, because you would say, well, look at all of that pressure, and where's the buyers at, right? Where are the buyers at in this? So you would almost expect the gap to be up here, but what happens is that actually the gap is very, minute. If you really spread it out, there's really not much of a gap, but you can kind of see as you spread out, there's about a 20 pip gap there, which is nothing on the weekly chart. Is basically like not even a gap. And when you look at that, what that tells you is that the market is back to it, or it's anticipating, because remember, the gaps are only anticipation. They're not real movement. So what the market makers are saying by that is that we're anticipating that GBPAUD is coming back to normal. We're not going to gap this. We're not trying to push this in any direction, because we essentially feel like we are where we're supposed to be. And then look what happens. Right where you would have expected the gap, this is, and most people, beginners essentially, would have expected the gap to be up in here somewhere. And look where our wick takes us. Our wick takes us right where the anticipated gap would have been. If you look back at the history, our wick takes us back to where that gap, many probably would have expected it to be, and then pushes right back down. And now we're continuing in a bear market. It's guys, this stuff is not hard when we know what we're looking for, when we understand currency strength analysis, when we understand that, these candles are telling us everything we need to know. Okay. And so remember, zooming out, we knew that we had to come back inside of our zone. Even if we were going to push back up, we needed a pullback. This stuff was not real. So it was all abnormality. It was all aberration in the market because of all the craziness going on with coronavirus and everything else. So we needed to bring things back to normal. What I'm telling you now, guys, is I'm not, number one, let me be clear. I'm not telling you that it's impossible for the price to continue in a bullish way. I'm not telling you that it's impossible for us to break out of this channel and go up, because it's very possible. But what I'm telling you is that the high probability is that we have bearish momentum coming into the market. We have the bears are going to try to take over now that we're back into some level of normality. And if you remember, when we were way back here, guys, back before the craziness started, I told everybody to expect for this to continue to go up and reject the top of our channel, and then pull back to our trend line and essentially fill out our flag here, right? They changed some things on Zoom, and I can't find my annotation tool. That's fun. But we were expecting it to come and bounce up in here, right? And essentially break out of this pendant, break out of this wedge, and an ascending or rising wedge would essentially break bearish, because that's what ascending wedges do. So because we're here, we start here with abnormality. The gap is now filled. And now we can look back at what the normal would have been. And so what do? We come, let's just take a little quick measurement. If we know that the normal gap gave us 104 pips and then took us up to 186 to the top of the zone, right? So if we know that, then watch this. Look where the old one ended. Right in here, let's go to 186, 186 right here, just outside of our trend line. So if we can get the 186 that we know that they were anticipating but didn't get, if we can get the 186 on the downside, we're going to be coming underneath or below our trend line. And if we close that beneath, even on, it doesn't have to be on the weekly. If we close that even on the daily, okay, at some point this week, we're going to be looking at a nice rejection, breakout right here. It'll reject the bottom of our trend line, and then you're going to be looking at a stern drop, right? Because at that point, you're going to be looking at a move back down to the bottom of our channel. And guys, what I told you was from the bottom of here, just look at that. We're looking at 1,200 pips if it breaks right now, right? And the longer it continues to wait and the higher up it has to, the higher the pullback on the Fibonacci is just higher and more pips we're going to get down to the bottom of the channel. So I'm telling you that we can expect at least 1,000 pips coming if we can watch, if we can get a retest off of the bottom of this trend line. It's powerful stuff, guys, to understand what the market is trying to do. So we got what we were waiting for last week. Now let's just be patient and wait on further confirmation. And hopefully at some point this week, we'll be calling a swing trade out on GBPAUD. If not, we're going to definitely be calling out some, shorter term stuff until we can get that trend line break or rejection. And, but I'm hoping at some point this week, we're going to be able to call out a swing on GA. So who's excited about that? Finally be able to get a swing in here. You guys have had me scalping in here and stuff. You guys have had me scalping. All right, cool. So let's just in the chat real quick. Does anybody have any questions about the GA analysis right now before we move forward? Justin says swing. My man. All right, cool. So everybody's on the same page then, it looks like, on the GA swing. We got what we were waiting on. Man, I felt like this has been a year. Like it's only been a month, but I feel like it's been a year. We've been waiting on this to happen. Breakdown is on point. I appreciate that. So yeah, we've been waiting on this a while, and we finally got that normalization, and I'm excited to see, what GA gives us in the coming days. And just look at how beautiful that is. Remember, just look at my correction cutoff strategy. You can see that video in the website. But when we do the correction cutoff, remember, we come back to normality, and then we cut off everything that is outside of normality, and then we take, the trade to the downside. So because we had 186 pips to the top of our first abnormal candle, we could take that 186 to the bottom of here, because we know that that's got to move, and it's already moving now. And so it's probably already halfway there, just on this weekly candle we're currently in. And if we get that 186, it's on and popping. So at that point, we'll be ready to, yeah, exactly, swing for the fences. Yep. So I've been hitting single after single after single. Right now, the bases are loaded, and I'm ready for a home run. So I'm going to show you something else real quick. Let me go to a more blank chart. I got all my markups on there. Okay. There's the trade from last week. Man, look at that. You know what? I didn't even plan on showing you guys that, but look at that. Did we call that or what? I gave you guys that last week even on the small chart. And man, that was beautiful. So let me just get this stuff off of the chart real quick, and then we're gonna look at some cool stuff. Man, and I'll tell you another thing, man. These trades have been hitting, ain't they? How many of y'all been taking these trade setups? Between what Jay's doing and Robert's doing and the stuff I'm calling out, these boys have been hitting. All right, cool. So when you scalp, what do you recommend? What does that mean? What do you mean by what do I recommend? I don't know what that means. Man, I don't know what they did with my annotation tool. Holy cow. I don't know what in the world they did with my annotation. It's all right. So when we look at what's going on, excuse me. Excuse me, which pairs, he said. All I trade is GA and gold. So it don't matter if I'm scalping, swing trading, It doesn't matter what I'm doing. That's all I trade is GA and gold. And really, I ain't been messing with gold too much. So yeah, it's GA all day for me. Are you guys going to do any trades set up for New York? Yeah, we do. We do them all the time. We just want to, you know, we just to be clear, I talked about this last week. We don't force the markets. We don't just say we trade, London, we're going to definitely give you a trade setup. New York, we're going to definitely give you a trade setup. We only give you what the market gives us. We're not meeting like a quota here. We got to have a trade set up every night, and this and that. We're just going to give you, if the market allows, we're going to take it. And if it doesn't, we're not going to take it. So if there's a trade set up during the U.S. session, yeah, we're going to take it. If not, then we're not going to force something and call losing trades just because we want to call trades. So we're only going to call what we feel is a winner. That makes sense? All right, so yeah, cool. All right, so when we look at this, and man, I feel crazy here because I'm probably looking right over it, but I don't know where my annotation's at. I must be tripping here. Gold can be a yes. Gold has not been my friend lately. But so okay, so let's look at this. When we have a pattern that looks something like this, right? And it comes up here, comes back down here, comes up here, comes back down here, and eventually it breaks out, right? And we see, and that what that ends up being is a wedge pattern, right? No, I do not use Oanda. No, I use Trader's Way as my broker. So we see the breakout like this on a rising wedge like this, right? We would see a breakout to the bear side, right? And that's essentially, even though it's a channel, what we see in the GA market right now is not. Oh, I grabbed the wrong tool. What we see on the GA market right now is not a channel; it's a wedge. But notice how inside of the wedge, at every level of resistance, what do we find, right? So I'm just giving you a little bit tonight on how to understand currency strength analysis. If this is the wedge, and we know that there's levels of support and resistance all through here, every time we hit another level of resistance, and we know we have the rising of the bottom of our channel, what essentially are we forming, right? So when we see this type of a setup like we have, we're seeing a wedge being broken here, and then we know this: if the wedge does not break bullish, then we know we're just looking at a bigger wedge, right? Does that make sense? So if we're looking at the smallest wedge possible here, all right, if that doesn't break bullish or bearish, then now we look at the next size wedge. So now we're bouncing around in here. If it doesn't break bearish, then we're looking at the next wedge, right? So really what we have sitting here right now is just we're capturing the price within the smallest area of visual effects, so we can see. We're not looking way out here to try to figure out what price is going to do. We're looking within the smallest area possible so we can find the cleanest breakout. Does that make sense to everybody? So we have a small wedge here. Then we have a little bit larger of a wedge here. Then we have a little bit larger of a wedge here. And then every time, guess what? Simple price action, right? What was a resistance right here becomes a support. And now this is the resistance. And when this becomes broken, it becomes a support. And then this becomes resistance. And so on and so forth, right? And so every time we see a new level broken, then we are looking at the next level to form our patterns. Now, guess what? It's the same way when we look down the other side, right? When price starts coming down the other way, right? What do we have, right? We have price coming down here, and we're looking for either a breakout or the next wedge, a breakout or the next wedge, a breakout, or and we continue to ride down to our levels of price action. We're not trying to anticipate something that we can't see. We're not trying to make something up as we go. We're looking at what the market has already given us based on demand, supply and demand levels, support and resistance that have already been proven over the course of history, which is why I start on the weekly chart, because it's giving you the most accurate, larger time frame, strongest levels. So when we come in here, and if this is a major level on the weekly chart, that's a strong level. And if this is a level on the weekly chart, that's a strong level, and it's going to take some major stuff to break it. So when we come in here and it's bouncing around inside of here, right, then that means if it breaks below, then that means we're just going down to the next level before we have a true pattern form. And so what happens is along the way, it's just bouncing around inside of here. It comes down, it breaks out, right? Comes down, we get the break, breaks out, and it's just riding back and forth between our channel. And eventually what's going to happen is it's going to break out of our channel. And when it does, it's going to be because a wedge pattern pushed it out. And then what you're going to see here is it's going to break out. It's going to hit our level. It's going to retest, come and retest what now we can single it down to a simple trend line. It breaks out, retests our trend line, and takes off, right? This is simple levels of price action that help us understand currency strength analysis. What does that mean? If we're riding a channel, let's go back to what we're actually doing. I just wanted to show you the opposite way. But oops. When we're looking at a channel like we are right now on GA, that is an ascending channel, right? And we've been in there for so long, 3 years now in this ascending channel. When we look at something like that, essentially what happened was it started because down here it hit a level of resistance. And then it came up here and it hit another level and it came back down, and in between our trend line, which is really a support and resistance, our other trend line, which gives us our channel, and then our resistance and our support and resistance lines, which give us the horizontal levels, we're just literally seeing price bounce around in here, which is why you would like it to go like this every time. Let me give you some explanation. Remember, it came down here, and we would like it to be just nice and clean. Come up and just kiss the top of our level. Come down and just kiss the bottom of our channel. Come up and kiss the top of our channel. Come down and kiss the bottom of our channel. But notice it doesn't happen that way, right? It ends up coming up here and coming up to the top, coming down, bouncing around a little bit, coming down, breaking, bouncing around a little bit, coming up, bouncing around. It didn't get all the way to the top. It turned back, came down. Why? Because you have a strong channel that it's respecting, but you also got levels of support and resistance in here that it respects as well. So we would like it to just go clean, nice and straight, up and down like this, right? That would be nice. But along the way, it hits levels of resistance. And as it's trying to get all the way to the top, it hits resistance here and plays around and drops. Comes back up, plays around and drops, comes up, and now it touches the top. Why? Because this level of resistance is near the top of our channel. So then it drops back down, and then over and over again, it just respects these levels. So if what I'm saying is that if we can understand how to mark out those levels and how to recognize supply and demand in the market, then that's when we can know where we should buy or not buy. Now, watch this. Let me show you something that's extremely powerful, okay? I want to change the color of that for your visual here. All right, I'm gonna make that red. So I know that's not perfect, but let's just say that's halfway between. if we have a channel and we split that channel in two, that's everything we need to know about currency strength analysis. You say, what? What is that? How does that tell me anything? Well, watch. If I'm here and I'm riding a bull move up, okay, at this level of 50%, when I break above that, and now it's looking for like buy movement, I need to just look at where I'm at according to being halfway done, because think about it. If I don't buy it out of the bottom of here and I'm looking at buying it here, isn't that move nearly almost over? That now, why am I looking to buy something that's already halfway done moving? And we know it doesn't just perfectly kiss the top of our channel every time. So why would I buy something that I know is probably more than halfway done? It's already halfway over. Why would I try to buy that? Right? We want to try to buy it down here. We don't want to buy up here, right? Why would I, if I'm all the way up here and price is here and I know that I'm about to hit the top of a channel, why am I buying right here? Think about it for a second. Let's just kind of, and I know this is just markings, but watch this. If I'm here and I've only got 224 pips to the top of a channel, but I've got 1,100 pips to the bottom of a channel, my risk reward is not right. Right? I should not be saying that they have potential here to drop 1,100 pips and potential to go up 230, and I'm taking the 230 over the 1,100. Why in the world would I put my money on 200 when 1,100 is possible the other direction? Right? That's like betting against the odds. So what I want to do is I want to find a market that's good for me. I don't want to be buying once it crosses over my 50, because at this point, once it's halfway done through the channel, I'm looking for reversal zones, right? I'm looking for crossovers to come back the other way, right? And so now, is it possible for the price to go from halfway to the top? 100%, yeah, all the time. But those are high risk trades that we take there, right? That's poor risk management. That's high risk trading, because at that point, I know that there could be a drop that takes me all the way down to the bottom of my channel. And I'm risking all, even though, yeah, I'm going to have a stop loss, but I'm just saying from a mental aspect, why would I take a trade that has the potential of going up only the same amount or less that it has of going in the wrong direction? Does that make sense to everybody? I want to make sure that we understand that every level can be marked that way. If we know that we're 50% of the way through a channel, right? Well, doesn't that same rule apply to a wedge? That same rule applies to a wedge. So if this is the wedge I'm looking at, again, let's just kind of take a look here. I'm gonna make this red too, just so you can kind of see. If this is the wedge I'm looking at right here, if I'm looking to break this wedge, and an ascending wedge generally breaks bearish. So essentially, at some point, I'm looking at this channel and I'm looking for it to break down. I'm looking for this channel to push me out bearish. Okay. So what I'm saying is, if we're in this wedge right here, if we're looking to fill out this wedge on the map, then let's watch this. If we drop a line, let's just say halfway. All right, let's just say we're right here and we drop a line halfway. Now, I could buy from here to here, right, to the top of the wedge, because that's safe. I know that the fact is that if I get confirmation that I'm not breaking out, then the fact is I'm going to end up going to the top of the wedge here. But once I get past this 50% point, once I'm more than halfway done with the move, why would I be trying to buy to the top of a wedge when I know that there's possibility it's just going to drop back down, right? That goes for every single pattern, right? So if now, let's say we cross over this level of support or resistance, I'm sorry. Well, now look, this wedge goes from this line to here. right? To this next level of resistance. So again, right? If I drop that halfway in, once I'm here, I'm no longer looking to buy from here to here, right? I'm looking for this to reverse, and I want to take it back down, because at that point, even though this might be more pips, this is safer pips, right? Even though this right here looks like really nice, it's not safe, but this to this is a whole lot safer. That's a whole lot less. Why? Because I can ride that down, and the maximum I'm really gonna risk in there is to the top line. So I'm not risking a lot. Whereas here, I'm risking all the way back down to my line, and I'm risking a breakout. So there is a lot more confirmation going in the opposite direction of the way I'm trying to trade. So what I'm telling you is that we need to be looking at these price points, these 50%, these 30%, these 65%, these Fibonacci levels, and looking and saying, I do not want to trade into a lesser probability than I have going against me. Okay. If I have, it's kind of like if you're in high school, right? And you, when you're in high school and you got these knuckleheads out there that they act like they're tough. They got a big mouth, right? They want to fight all the time, but it's usually when they got 10 friends standing around waiting to have their back, right? Then you catch that same little punk after school by himself, and you're like, hey, what happened now? You know, and suddenly he's quiet. You know what I mean? Suddenly he ain't got his friends around and he's quiet. Well, it's kind of like that. That's what we're doing with the market. We're going up against 10 guys. We have one possibility to go from here to here, but we have 4 possibilities of dropping back down, breaking beneath. We have more room down here, and we're going up against a fight that we really can't win. And yeah, can you get a lucky punch in there and win a trade? Sure. But again, that's not high probability. You're taking low probability trades because you just want to trade. I'm telling you that we need to take stuff that is high probability and be patient and wait for the stuff that's going to pay us. All right. Does that make sense to everybody? All right, good. I'm glad that's making sense. So now here's the next thing. All right, let's take a look at this. All right, let's go back to the actual chart. Watch this, guys. I showed you guys a little bit about the Vortex last week, and I'm going to show you a little bit more about it tonight. Let's spread that boy out a little bit for us. All right. So I want you to see something. When we looked at the Vortex last week, and I'm not going to go over, if you need to understand what the Vortex is or how it moves, go back and watch the video from last week. So I don't want to keep everybody, I think I went like an hour and a half last week, and I don't want to do that. I got about another maybe 15 minutes or so, and I want to make sure that you guys are out of here on a decent hour. But basically, in a nutshell, the Vortex is similar to the ATR, and it gives us the number of pips. It gives us the volume of exactly what, let me open that up here so you can see it. So right here on the blue candles, we've been having an average of 770 pips going up, 77 pips, going up. And we've had 94 pips coming back down. But watch this. When we look at the blue being on top, that tells us that we are in a bullish market. When we see the red on top, that tells us we're in a bear market. So why do we have blue on top when we have such strong red movement? Here's what I want to show you about the Vortex, and you can mark this if you'd like. The Vortex essentially is going to give you a 50% level, all right? And it's this one right here. In fact, let me go ahead and drop a line on it so you can see it. All right, so that red line is the halfway point. Notice how most of your crossovers happen right around that point. Okay, most of your crossovers happen right around that 1.0 line. All right. So that's essentially halfway. That's when you have price, you know, buying and selling basically coming together. The markets are evening out. All right. When the blue breaks above, that tells us that we have bullish pressure. When the red, let's kind of go back here. When the red breaks above, that's when we have bearish pressure, right? Everybody's with me so far? Real simple stuff here. All right. Now, but here's what I want to show you. Imagine what would happen if we took the crossover on the Vortex and we traded it to the 1.1 line. Let me show you something, how powerful this is. Guys, this stuff is like crazy. The cross happened right here. I want you see my dotted line? Everybody can see my dotted line? The cross happened right here. So we take that trade. It goes all the way up. We pull back, and look where we are. When look at right here. When we end up coming back over, boom. Look at this. If we take it from the cross to the blue line or back to the crossover of the blue line, we end up getting beautiful movement from here up into here, back down into here, comes all the way back up. Even right here, where it kind of tries to come back down, you can kind of see now, mind you, a lot of this has to do with craziness, but if we take the crossover to the 1.1, either direction, red or blue, watch this. Crossover right here, boom, right? We literally get the standards. Actually, the Vortex, I'll go over the settings in a minute, but the Vortex really needs to be adjusted by what you are using it for. For me, if you're looking at the GBPAUD, I use a 26 on the Vortex. I've been kind of adjusting it to kind of find the perfect mix, and I'm finding that the 26 between 24 and 30 really are your perfect settings. I really like the 26 is what I'm seeing so far. And then what you want to do is you want to have on your Vortex settings, you want to have those. Appreciate it. Yep. You want to have the Vortex settings going along with a moving average. Okay. And I'll show you that in a minute. But if you take the red crossover here, okay, boom, you're right there. So you're right here. Come all the way back out. So right here, you could have said, okay, there's one exit on the trade. But then, of course, you got a gap right here. And you could take that all the way back down to here. And boom, you could have taken that. That would have been from here back into here, would have been 916 pips. 916 pips, guys. Now, all I'm telling you is this is simple, 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 because you really don't have to do anything, right? Essentially, what you can do as well, and you got to taking those trades on a crossover is for swing trades. You could do it on a swing or a scalp. Watch this. Let's look at the 30-minute. All right. Red crossover happened right here. Notice how that's in confluence with the retesting right here of your moving average. Right? You get your crossover, and boom. You could ride it right there. It crosses out. It breaks past your 1.1 line, and that's major pips. You could take it all the way back to the other side where, you know, breaks out and then comes back over, and look where you're at, right? So essentially on that particular trade, right, you got the crossover here. You come back in right here. 149 pips on the 30-minute chart. 149 pips on the 30-minute chart. right? It happens over and over and over again, guys. You get the crossover here, red. You can take it all the way out, take it back into here, and you would have had 142 pips on the 30-minute chart. Guys, it's crazy. It's crazy. Beautiful stuff here. And here's the crazy thing about it is that when we put it in conjunction with what we're trying to do as far as your patterns and as far as your price action, it's amazing confirmation, because watch this. All right, you see these levels here? My moving average crosses over my middle level at the highest point of a sell. So what does that mean? It comes back down, it retests my moving average, which is in confluence with my major zone here, and we get this huge drop off. So all I'm saying is that price action alone told me that major movement was coming. Right? Now, how did I know how much movement? Well, I go back to my Vortex, right? I go back to my Vortex. John said, I've been using Vortex. It works very, yeah. Vortex is powerful, man. It's, in my opinion, probably the most powerful indicator in Forex right now. Yeah, I think it's probably the most powerful indicator on Forex right now. What I'm using is the I see your question about the trend line here. What I'm using right here is this 100 moving average, simple. And of course I got them all set on one, and then I just, trade it. I just set it however I want. Yep. Yep. You can play with it too. If you're on the smaller time frames, you can try it with a 50. You can try, I was actually trading this week. I was doing some back testing with it, with a 200 moving average on the daily chart, and it was absolutely powerful, absolutely crazy, watching it with a 200 moving average on the daily chart. Yeah, yeah, that is strong. That is strong. Using it with that. Yep. So guys, price action is king. Price action tells us the first move, and then when we look where price action is, right, we see that the red is pulling off of the bottom, meaning that we're heading for a cross, right? So boom, we get the cross right here, and it drops the rest of the way. Boom. So we would love to be able to get that right there, and using other price action rules, we can do that. We got this move here. We push back. We're rejecting the moving average. We get this nice pin bar right here. We get this nice doji pushing off the wick, and then of course right here is where we would want to take that trade. And look, right here is where you got the cross. It's just amazing, right? So you see the wick pushing off. Let me spread that out a little bit so you can see it a little bit better. Unless I'm just blind, I don't know. But you see that nice wick pushing off of the moving average? You'd want to get it right up in here. Boom, here's the cross, and it drops. Just beautiful. So just on that alone, using price action and the confirmation on the Vortex, we could have taken it right there, 249. Now you say, well, it didn't come back and cross over yet. Well, yeah, that's fine and good, but price action is king. It came right down to my level. I personally would have been out on this candle right here because it came down and tested my level, my major structure. So I wasn't going to, try to keep messing with it. I'd have got out right here as soon as it touched my major level. So I'd have caught 250 pips and been out of it, and then avoided all this sideways, ugly stuff. If I can get to be, that's right. So, guys, this stuff is powerful. This Vortex is super powerful, guys. It really shows you, what's going on in the market. I would encourage you to study the Vortex. Study. What you want to do is go back to the ATR. Okay, study the ATR. Mess with it. Now, don't use the ATR. I'm saying study how it works. And the difference between this and the ATR is that the ATR gives you the volume or the number of pips essentially that count, you know, like, so if this is a 26, so if this was ATR, it would take the last 26 time periods, average out the number of pips that it moves. So let's say that's 20 pips, 10 pips, you know, 20 pips, 30 pips, 10 pips. It would add all that up, then divide it by 26 and give you the average number of pips in the last 26 candles. So essentially, at this point right here, it was saying that, you know, that we had 20, you know, 30 pips average in each candle, 29.5 average in each candle, and so every candle on the average was giving us around 30 pips. So when we know that, if it's giving us an average of 30 pips, we can set our stop loss out by 35, you know, or something like that, divide, you know, times it by 1.25 or something like that. Come back, find your level of structure. We come back here, we enter a trade, and watch this. Right? If we know we have, you know, about 70 pips to the top of our channel, we can go right back here from here. And if we go back up like 30 pips, look at, you're right into your previous left. So you just come outside of your left, boom, there's your stop loss. You can ride it down. Easy money. Easy money. Right? So Vortex is super powerful. So when you can understand the average number of pips, the average movement or volume in a certain time period, you can use that to judge how much I'm going to get when we have a breakout, right? How do I know that? Well, I can drop a fib on it and I can say if from the top level to the 50 level is, let's just say 70 pips, then if we're at a major level, knowing that I'm about to push it down, then I'm looking, if I know 50 is only halfway, I know I'm pretty guaranteed I can get 100 pips out of this. So what ends up happening is I take it my 100 pips and then I watch and see what my Vortex is doing. If my Vortex is telling me that it's exhausted and I'm ready to start coming down, like it's way up here already, kind of like an RSI, overbought, oversold. If I'm too far up and I'm like, oh, you know, look, this is exhausted at this point, I'm taking my 100 and leaving. But if I'm still pushing up, man, oh man, I'm like, I still got more room. And the Vortex gives you the understanding of currency strength analysis. So it's really powerful, guys. Anybody have any questions about that? Yep. Vortex?
On your Vortex indicator, why do you have the 1.1, 1.05 line and the 0.9 line
Yes.
drawn on the graph?
Yeah, so I didn't get into the 1.05 just yet. And that's something I'm working on right now, but I'll go ahead and tell you what we found as we're doing some testing here is, like, for an example, let's see up here. You kind of, and I want to kind of show you the chart and that at the same time. But you notice how when it crossed, see how high that was when it crossed? You know, usually your crosses are down here by the 1.0, right? Meaning that buy pressure and sell pressure are about even. You know, they're both about the same. We're probably looking at some, you know, being in the middle or near average of where we are. This, for an example, crosses way up here, right? Showing that not only did we have strong buy pressure, but we also had strong sell pressure. Does that make sense? So if we have strong buy pressure and we have strong sell pressure, that tells me that we have sideways movement. So when I see the 1.05 line, if I see a crossover that happens above the 1.05, I don't take the trade, because even though it is a crossover and it shows me movement, it's got too much opposite movement as well. If I have a strong buy pressure, I'm looking for even or weak sell pressure so that I can take one direction and not try to trade against something that's equally as strong. Does that make sense? All right, we got Justin Roman. I said, yeah. I don't know who that was that said that, but that was a good question. All right.
So if it's above the 1.05, it means there's a strong buy and sell pressure. So most likely it'll just consolidate
That's correct.
until.
Yep.
Oh, okay, sweet.
That's correct. Yep. Because obviously, if we're looking for a buy, we don't want the red to be up high, right? We want the blue to be up high and the red to be down
Yeah.
low. And so when we have both of them up high or both of them down low, then we know that we're going to end up having some sideways movement.
Cheers.
Yep. Anybody else? See, like this is a beautiful setup. We get the cross right in the middle. Red goes one way, blue goes the other. We showing volume, boom, and we can ride that all the way down. You know, you could just literally take it all the way down. Just beautiful. Pretty straightforward so far, yep. Hey, look, this stuff is not complicated. I mean, it's a little complicated, but it's not hard. It just takes practice and it takes some you know, really just studying a little bit, you know. We overcomplicate Forex sometimes. We got 30,000 indicators on the chart, and you know, we're looking for, you know, 315 confirmations, and you know, sometimes we just need to look at price action and then look at volume to tell us which direction price action is going to take us. Yep, price action is everything, guys. Price action is king. If price, I don't care what indicators, and I'm not knocking anybody's strategies, or I see people on YouTube that's got, you know, some pretty good strategies that use indicators and things like that. But guys, I understand all the indicators. I know how they work, but I promise you, you can put 25 indicators together and they can tell you, you know, whatever they want to tell you. If price action tells you the opposite, you take price action over indicators any day of the week. Price action's king. You know, and the reason is, and then now this is kind of basic, but the reason is because it lags behind. You know, the indicators are they lag by nature. He said most indicators. What did he say? Most indicators are crap, and that's pretty true. The indicators, like this is a moving average, right? A 100 moving average, meaning it gives me the average number, an average close price, because I have it set to close. It gives me the average close price of the previous 100 candles. That's the case. I have to have 100 candles closed before that can give me a number, right? And of course that moves with the current price of the current candle. But so what I'm saying is price has to move in order for me to to have that price. So right now, let's just kind of look right here. Right now, the tip of that moving average is right here, meaning that when we look at it, 1.96360. When we look at the last 100 candles on the 30-minute chart of GA, the average price over the last 100 time periods is 1.96381. Okay? So in order for me to know that, well, I had to have 100 candles close. So I have to depend on all of this to already have happened in order for me to get to know that little piece of information, just for me to know where that end of that line is going to be. So essentially that line can't be where it is until all of that happens, right? So we can't rely on this because this is going to happen. Even if it's just a small tick, it's going to lag behind this because this by nature has to happen first before this can happen, right? So if we're going to depend on indicators, we're always going to be chasing the market. We're always going to be going after price action. Price action is going to move, and then we're going to respond to it. But when we understand price action trading, like this is price action. We know that we have a channel here. We know we have levels of structure. We know that we've been in a channel for 3 years. We know that back here, we have zones that have been respected over and over and over again for 20, 30, 40 years. We have all this kind of stuff that tells us where price is not where price, you know, the last 100 candles this or the last 100 candles that, but it's letting us know that when we break this, we have a trend line. This is where price is going. It's kind of like a quarterback. You don't throw the ball to where the receiver is. you got to throw the ball to where the receiver's going, right? And so that's essentially what we're doing with price action. Is we're not trying to trade where price is. We're trying to trade where price is going, right? We want to get ahead of price instead of chasing price, okay? And we can't do that with indicators. We can only do that with price action and market structure. Now, when we see this lets us know that it's a confirmation. All this what you're seeing here, red coming up, blue coming down, looking for a cross, and red to be coming up and blue to be going down, which means more bear movement. That's a confirmation of what we're seeing on the price action. This doesn't tell me to trade. This tells me that what price action told me is true. It's just a confirmation. It's not the thing that I use to enter or the primary source of my trading. It literally is a confirmation to what price action is telling me. Okay. I'm using Oanda. Your platform toggles between Oanda and FXM. Yeah. So this is just tradingview.com. So yeah, it uses the Oanda and FXCM charts, but I use Trader's Way as my broker.
I've just got another question about the Vortex indicator.
Yeah.
So you got set at 26. Does that work for all time frames, or is it only working for the weeklies or the dailies or the higher time frames?
No, it will work. Here's what you have. Okay, so let me just show you real quick. Watch this. That's how it comes standard on a 14. Okay, and you can see it's a little bit just smoother. It doesn't give you it just kind of moves with only the more recent information. When we get on the 26, and again, those numbers, what I have found in back testing is somewhere between 24 and 30 works on your especially on your smaller time frames, which is what we've been trading. When you get into the smaller time frames, you want to have probably a little bit of a higher number, because it'll help you to eliminate some of the noise in the sideways movement. Because on the smaller, on the 14, you might get a crossover and it's nice and smooth. It's a crossover, but it's a fake out. It crosses over and then comes right back.
Yeah.
Something like what this does here.
Yeah. Because at the moment I'm using 24 on the 30 at the moment, and it's all right. I was just like seeing what's the best number to use for the 30-minute and the 4-hour from top-down analysis.
Yeah. So the lower the time frame, the higher the number is generally what I'm finding. Yeah. And the bigger the time frame, you can get away with the smaller numbers.
Oh, okay, sweet.
Yep. So put that back on 26. Anybody else have any other questions? Man, we must be good to go. Guys, we're gonna be looking for some swing positions. How do you get the levels on the Vortex? What do you mean by how do you get the levels?
I think he means drawing the levels, like the lines you have on the Vortex indicator.
Is that what you're asking, Emmanuel? Yeah, that's what he's asking. So I just drop. If you're asking practically how I do it, I just put the trend line or the horizontal line on there. But if you're asking why I put it there, it's because it's the first price action level. If you go from 1 to 1.1 and 1 to 0.9, that's, if you go back, look at it. It's almost like support and resistance right on your oscillator, right? So every time you get a breakout there, you end up getting a huge move. Comes back, breakout, huge move, right? Retest, big move, and so over and over again, that level, is generally the max point of your sideways movement. So when you're moving sideways, let me find somewhere where we're moving sideways here. When we're moving sideways like this, you're generally between these levels, right? when we break out of these levels is generally when we see big breakouts on the chart. Does that make sense? And so that's the confirmation, is if we can get the breakout of those levels, that's when we know that we're going to have big movement. All right. Do you have a video of your chart set up for GA? Yeah, that's so that's in a couple places. If you go in the Telegram, I actually have the picture of it right there. You know, I gave you guys my chart. It's on the media section of the Telegram. You have that. Also, it's on my YouTube channel in the community section. So you can look for it there. And then if you go on YouTube, I have a video series called Forex Fashion, and it shows you how to mark out these, you know, how to find those zones on whatever pair. It doesn't have to be GA, it could be any pair. It shows you how to find those supply and demand zones. And for those of you who don't already have my YouTube subbed, I mean, you guys can go ahead and do that. I got a lot of content on there as well. Trade and get paid. So you know, go to my YouTube and sub. I just dropped a video a couple days ago with showing you how to find breakouts on the wedge patterns, and it's powerful. So you can go on there, and Trade and Get Paid is the YouTube channel if you don't already have it. Cool, cool. Vortex level is 26. That's what I'm using right here. But again, you can use, you know, whatever you like. Really, the higher the time frame, the smaller the number. The lower the time frame, the bigger the number. All right. That video on wedges definitely changed the game. Oh, cool. I'm glad you watched it. Glad you helped you out. Yeah. So yeah, go to the YouTube channel and sub if you haven't done that yet. Trade and Get Paid, and we'll get you on some of those videos. And those of you who are on Jay, you know, came in with Jay, you guys, if you probably already know this, but I hope if you don't know this, you're more than welcome to watch our videos as well. You can go to the Trade and Get Paid website, and the password is in the Telegram. And you know, if you're on Jay's team, you're welcome to utilize that. We've got tons of videos on there, you know, stuff that's there as well, and vice versa. If you're on my team, you have access to Jay's Team Take Profits website as well. So what level would you use on the 30-minute? That's what I'm using the 26 for. I'm using the 26 for the 30-minute chart. I was showing you guys the weekly only because we're kind of starting to get back into a swing mode. But because I've been on the 30-minute chart recently, that's what I've been using is the 26. When I go to the weekly chart again and I'm looking for swings, I'm probably going to use the 14 or the 16 on the Vortex. Yeah. All right, guys. Well, what's the levels on the Vortex? 1.1 and 0.9. The crossover, I don't want to be more than 1.05. The red line is just a halfway point. It's just one. That's just your halfway. So that really don't even matter. But yeah, 0.9, 1.1, 1.05. All right. Cool, cool. Well, guys, I appreciate you. Glad you guys were able to be on with me tonight. The recording, I'll get the recording posted as soon as possible. And you guys have a great night. I hope with all the craziness going on in our world, you guys are staying safe and healthy. And I'll see you guys in the chats. All right. God bless you.